Imagine owing your neighbor 3 steaks. Not dollars, steaks. Then winter arrives early. Your children are hungry, while your creditor wants interest. Suddenly, debt stops sounding modern. It starts looking prehistoric. Because long before banks, credit scores, or payday loans, humans discovered a dangerous trick. You could lend someone survival, then collect their future. That invention changed civilization. It built farms and empires. It also created slaves, prisons, and financial panic. Today, we call it finance. Back then, it was personal. Very, very personal. So who invented debt? Why did everyone accept it? And why does owing money still feel like physical danger? To understand that fear, we need to return to humanity's first balance sheet. There were no accountants, no contracts, no collection agencies, not even written numbers. But humans remembered feathers, especially unpaid ones. Picture a tiny hunter-gatherer tribe, maybe 40 people total. Everyone knows everyone. Everyone knows who shares, who cheats, and who disappears whenever repayment becomes inconvenient. One afternoon, Grog gets unlucky. The hunt completely fails. His family has nothing. Across camp, Mork has plenty, more meat than he needs. Grog asks for help. Mork could simply share. That strengthens tribal cooperation. But sharing has a weakness. What stops endless freeloading? If Grog never repays, Mork becomes the tribe's supermarket. Except nobody brings money. So Mork proposes a deal. Take this meat today. After your next successful hunt, return an equal portion. That is basic credit. Consumption now, payment later. No coins are required. Only trust and memory. This works beautifully. Until memory gets creative. Grog remembers borrowing 1 steak. Mork remembers lending 3. Both feel completely certain. Congratulations. Humanity invented disputes. The tribe needs evidence. First, witnesses remember agreements. Then objects record them. A notch means 1 portion. 3 notches mean 3 portions. Primitive accounting has arrived. It solves one problem, while quietly creating another. Once debt becomes recordable, it can become transferable. Mork can tell another hunter, Grog owes me 3 steaks. Give me a spear today, and you collect his meat. Now Grog's promise has value. It functions like money, not because it is useful, but because people believe someone will honor it later. This is humanity's financial superpower. We can trade imaginary futures. A farmer borrows seeds today, promising grain after harvest. A hunter borrows a spear, promising meat after success. A village borrows labor, promising protection during conflict. Credit unlocks cooperation across time. It lets weak seasons borrow from strong seasons. It funds risky expeditions. It keeps families alive. Debt is not automatically evil. It is a time machine, but every time machine eventually attracts someone dangerous. That someone is usually powerful. Meet Chief Karg. Karg owns the biggest granary, not because he farms. Karg never touches dirt. He simply stores everyone's surplus. During abundance, this seems sensible. Grain spoils inside individual huts. Central storage reduces waste. Karg protects it from thieves. Everyone wins initially. Then another brutal winter arrives. Families urgently need grain. Karg opens his doors, but generosity has vanished. Every basket becomes a loan. Every loan includes interest. Borrow 10 scoops now. Return 12 after harvest. Those extra scoops are interest. Interest compensates Karg for waiting and for risking default. At least, that's the explanation. The deeper truth is leverage. Hungry people cannot negotiate calmly. They cannot shop around. They cannot wait for discounts. Survival has an immediate deadline. This gives Karg pricing power. The worse their desperation becomes, the better his terms become. Better for Karg, obviously. Here debt changes character. It stops being cooperation. It becomes control. Miss one payment, and interest joins the balance. Miss 2 payments, and interest earns interest. That is compound interest. Einstein probably never called it the world's 8th wonder, but Karg absolutely loves it. Suppose Grog owes 12 scoops. A failed harvest prevents repayment. Next year, he owes 15, then 19, then 24. Soon, numbers outrun harvests. Grog works harder, yet owes even more. This feels mathematically unfair, because human intuition is linear. We expect steady growth. Compound growth is exponential. It begins almost invisibly, then suddenly dominates everything. Modern credit cards exploit this. Small minimum payments feel manageable. The balance quietly survives. Then interest breeds overnight. Ancient grain debt behaved similarly, except consequences were more physical. When grain could not repay, creditors demanded collateral. Collateral means valuable property pledged against a loan. Repay and keep it. Default and lose it. Collateral reduces lender risk. It increases borrower danger. Now, failure costs tomorrow's income and today's survival tools. This creates a debt spiral. Borrow because you are struggling. Repay until you become poorer. Borrow again because repayment hurt. Repeat until nothing remains, except your labor, and sometimes your freedom. Debt slavery was born, not through dramatic conquest, but through ordinary agreements, one desperate promise at once. Archaeology confirms this pattern. Ancient Mesopotamians recorded loans thousands of years before coins. They borrowed barley and silver. They paid standardized interest. Scribes documented every obligation. Temples became primitive banks. Kings enforced repayment rules. Debt became legally real, more permanent than memory, more powerful than argument, and extremely difficult to escape. Debt crises became so destructive that rulers periodically erased balances. These were debt jubilees, not random acts of kindness. They were emergency system resets. Without resets, society could collapse. Farmers lost productive land. Soldiers lost family farms. Citizens became dependent servants. The economy stopped circulating. Wealth gathered at the top. Demand disappeared at the bottom. Even creditors began losing customers. So rulers cancelled debts to preserve the whole machine. Forgiveness protected future tax revenue. It restored military manpower. It prevented elite civil war. Most importantly, it restored hope. Because hopeless debt changes behavior. If repayment seems achievable, people work toward freedom. If repayment becomes impossible, effort starts feeling pointless. People hide, flee, or revolt. Economists call this debt overhang. Ancient rulers learned it brutally. Modern governments learned it repeatedly. Different clothing, identical math. But math explains only half. Debt also hijacks ancient psychology. Remember that tiny tribe? Reputation meant survival there. Generous people received future help. Cheaters risked social exclusion. Exclusion could mean death. Therefore, owing triggered social alarm. Your brain hurt. Repay quickly, or lose your people. That alarm still operates. Except your tribe became institutions. Your lender may be faceless. Your debt may be digital. But shame remains intensely physical. Tight chest, racing thoughts, trouble sleeping before payment dates, avoiding emails from your bank, feeling judged at grocery checkouts. These reactions are not irrational. They are historically outdated. Your nervous system cannot distinguish tribal rejection from automated reminders. Both announce possible resource loss. Both threaten future security. Both activate ancient fear circuitry. Lenders understand this, consciously or not. That is why reminders escalate. Friendly message. Firm warning. Final notice. Legal threat. Each step increases social pressure. Pressure makes repayment feel urgent. Urgency discourages careful calculation. You pay the loudest creditor, not necessarily the costliest. This creates financial whack-a-mole. Pay one balance down, another suddenly demands attention. Ancient Grog faced grain collectors. Modern Grog faces notifications. Same panic, better graphics. Technology modernized debt collection. It did not modernize brains. This mismatch creates profitable anxiety. Fear sells expensive solutions. Consider the payday loan. Its promise sounds merciful. Survive until your next paycheck. Structurally, it resembles Karg's grain. Scarcity makes the offer irresistible. Short deadlines magnify the cost. Repayment creates another shortage. Another shortage requires another loan. The trap closes quietly. Credit cards can work similarly. So can overdraft fees. Buy now, pay later can too. Different products. Identical vulnerability. People under pressure discount tomorrow. Psychologists call this present bias. Today's hunger feels enormous. Tomorrow's repayment feels abstract. Lenders exchange immediate relief for a claim on tomorrow. Sometimes the trade is brilliant. Sometimes it is catastrophic. The difference is productive capacity. Good debt expands future options. Bad debt sells future options. That distinction sounds simple. Reality makes it complicated. Education may increase income, or produce decades of payments. A mortgage may build wealth, or magnify a housing crash. The loan is only machinery. Outcomes depend on what it powers, and who controls the switch. This returns us to power. Debt is never merely arithmetic. It is a relationship. One person needs resources now. Another controls those resources. The contract connects their futures, but rarely as equals. The person who can wait usually negotiates the better deal. Time itself becomes bargaining power. Wealth buys time. Poverty sells it cheaply. This is debt's hidden transaction. Borrowers think they purchase money. Often, they sell flexibility. Monthly payments narrow future choices. Changing jobs becomes harder. Starting businesses becomes riskier. Escaping bad relationships becomes costlier. Even rest starts feeling expensive. This is why debt weighs more than its dollar amount. It consumes optionality. Optionality is invisible wealth. Savings create options. Heavy debt removes them. Ancient humans understood this physically. We experience it financially. Same loss, different interface. So should you avoid debt? Not automatically. Civilization itself runs on promises. Mortgages build homes. Business loans fund production. Bonds construct roads and hospitals. Credit smooths temporary emergencies. The goal is not purity. The goal is preserving agency. You want debt serving you, not you serving debt. Before borrowing, ask for questions. First, what does this create? Not what does it purchase? What new capacity appears? Will it earn income, reduce costs, or increase resilience? Or merely satisfy today? Second, how fragile is repayment? Calculate using bad months. Optimism is not a buffer. Assume income temporarily drops. Assume expenses unexpectedly rise. Can payments still continue? Third, what secures the loan? List what default can remove. Your home, your vehicle, your wages, your reputation. Risk deserves concrete names. Fourth, who gains control? Does repayment preserve flexibility or dictate every future decision? This question exposes the trap. Affordable payments can still imprison, especially when stretched across decades. Also examine the interest rate, but never stop there. FEs can imitate hidden interest. Penalties punish temporary mistakes. Variable rates transfer uncertainty. Long terms disguise total cost. Always calculate the total repayment, then compare it with value. Ancient borrowers counted grain scoops. You must count every dollar. Next, build bargaining power. Emergency savings by waiting time. Waiting time improves choices. Multiple lenders weaken scarcity. A strong credit history helps. So does saying no. The strongest borrower can walk. Karg's power came from monopoly. Your defense is having alternatives. Finally, separate shame from strategy. Debt is information, not identity. Owing money means one thing. Future resources were spent early. It does not prove laziness, stupidity, or moral failure. Shame hides balances. Strategy measures them. Shame avoids lenders. Strategy negotiates with them. Shame repeats ancient panic. Strategy interrupts the pattern. We invented debt together. We can redesign its power. Never let tomorrow own you.